Hey everybody, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video, where I'll be talking about supply and demand in the order flow, how to recognize it and take advantage of it. But before we jump in, if you enjoy learning from my videos, be sure to subscribe to the channel, click that notification bell so you don't miss any new uploads. And again, if you find today's video helpful, be sure to hit the like button for me and leave a comment sharing your biggest takeaway. I love hearing your feedback. And if you got a suggestion for a new video, be sure to leave that in the comments below. Hopefully this weekend I could crank out a bunch of videos based off of your comments or to get back to your questions. So your support really does go a long way in helping build out this channel. All right, so let's go ahead and talk about today's topic, right? Supply and demand. That's a term that we hear a lot, from traders, always talking about supply and demand. And sometimes they just, I see people just sort of draw lines on their chart saying, oh, there's a demand here, there's supply here. But they're not really looking at the actual trading that's taking place. So they'll just look at a point on a chart and say the market turned here. Oh, there's demand came in here. Okay. Well, actually, on this move down, right? This is where using order flow is going to give you some insight that other traders don't have because they're not looking at order flow. Look at this, right? We were trading, around just before 8 o'clock this morning, right? Our high in the gold is our low rather, 1890.50, okay? And, then we got a big 745, big push down in Delta down into the new lows. Now, Delta, right, is still positive for the day. It's like plus 1,000 Delta, okay? Very tight range overnight. And then we just sort of going sideways. And then, 850, start making a new low in gold. Okay, but this was interesting because here, right, our delta, this is cumulative delta on the bottom part of this chart is cumulative delta, is about 1,000. And now we're making a new low here at 88.10, but our cumulative delta, is like minus 1,800. We actually saw cumulative delta almost double. At one point it did double, got over 2,000 here. Then we came into the new low, and our delta from where we were earlier, obviously, is much higher. Okay, and then delta and price, they do sort of go along in the same direction. Both start trading higher. We trade all the way back up to 93.30, which is about where we opened the night before. Delta at this point is at its kind of at its strongest level. All right. Then the market starts going down, right? Price hip here starts going down, make a new low. Okay, delta drops a lot in one bar. And then it's just going sideways for the most part here. Okay, I mean, it does dip a little bit here to 42, but price keeps selling down, right? We keep making new lows. I mean, we literally drop from, 85.90 down to 74. It's a $10 move. Delta's basically not moving. I mean, it does go up a little bit, comes back down. But by the time we get to this low here, where's Delta? 2,000, right? Here, Delta's positive 2,000 cumulative Delta. Okay. And, here we had that big push down. Delta was minus 1,400. Even here, where we were earlier in the day when we just made that new low, Delta was around positive 1,000. Now we're, what is that? 90 down to 74.5, $15 lower. Yet cumulative delta is quite strong. It's double where it was earlier, now that we're $15 lower. Right? And even in this $10 move, we're still higher than we were $10 ago. Why is that, right? I mean, these are the questions, as a trader, once you understand why it's happening, then you can understand what's taking place in the market, and you're going to look for that release valve, because you can see here how delta, finally starts jumping, basically. I mean, look at this. Delta here, we're, at 4,000, right? And price has gone from 74.5 up to, the mid 80s, okay? But what's taking place here? You have supply in the market, right? What is supply? It's selling pressure, right? Because think about, people say, sometimes people don't understand really what supply and demand is, okay? And, it's not some esoteric concept. Think about it in basic everyday use. Okay, say you, I don't know, say you got apples. Say you got an apple tree, right? I went apple picking, so I'll use apples as a example. Okay, I got a bunch of apples because I have a bunch of apple trees in my backyard. Well, I have a lot of supply this time of year because it's apple season. So what do I got to do? I got to keep selling them before they rot, basically. And what you're seeing here is the person with the apples lowering his price. But since it's apple season, people know that, hey, you know what, I could buy apples now for cheap. So they're coming in, they're trying to buy, basically buy the apples what they think is a cheap price because we're at our lows. But there's just so much apples. The seller's got so many apples. He keeps offering them lower, okay, till he gets to that point down here where he's got no more apples. And now people that were thinking, oh my gosh, it's apple season, I can buy apples for cheap. Once they realize that, oh shit, you know what, the guys selling the apples, they're almost sold out. And now they're like, but it's so cheap, I got to buy them. Right? And now they're starting to buy it. Right? This is what's taking place. And if you look at the actual order flow, let me get the footprint chart here. Okay. This is it. Right? You can see, let's sort of go back to that low here at 88.10. Okay. Market is basically going sideways, a little bit up, trades back up to the opening price, starts trading back down. Okay. But as we're going down, right, we get, the few bars with some strong selling, minus 539, right? Then a little bit of buying, but the key to identifying what's taking place here, the key to identifying that there's supply in this market are these bars, these red candles. They got positive delta. Because what does that mean? Right? Why is a candle going down? Just think about it in itself, right? Just break it down to its smallest form. I got a candle right here, opened at 88.30, closed at 87.70, but it's got positive delta. Well, then you're going to start looking a little bit deeper at the candle itself. Okay, you can see some decent volumes, 36, 29, 33, 25. Okay, the volume that's trading on the offer side is more than what's trading on the bid side. So these candles are going down. You have aggressive sellers hitting these bids, but what's causing this market to not rally is supply in the market. So there's suppliers, if you will, use that term, suppliers, they're there absorbing whatever buying pressure is. Go back to our Apple example, right? We dip down here. People say, oh, shit, 86 even is a great price. I got to start buying, okay? And they're starting to buy. But now the Apple sellers, the wife just pulled up to the stand with the pickup truck, and then they got more apples to sell. So people are coming in here buying more apples, buying more and more. But now they got a new shipment of apples just came from the farm. They're selling them out, right? Because now people are like, here, take my money, and they're happy to sell. That's why you have that positive delta. Okay, get down in here, you can see it, sort of the same things taking place, right? Red candle, positive delta, red candle, positive delta. Here you get some smalls. Then you start seeing the aggressive selling starting to take over in here, right? Now you're getting the red candle with the negative delta, negative delta, negative delta. Okay, and every time you sort of hit a bottom, what you think is the bottom, and you sort of see a little bit of buying pressure come in, right? The positive delta on the lows, like here, even here, right? You can see there was a nice point of control on the bottom here. It's got negative delta, so okay, there's a big buyer down here. So, the guy is sitting down here. I'm waiting to buy these if they get down to 18.80.30. So he's sitting there with his bid, right? He's got that resting liquidity. They're selling to him now. The Apple guys are selling to the bidders here, right? The buyers. And then what happens? Nothing. Doesn't go anywhere. Next bar is a red candle with positive delta. So I know there's more volume on the offer side. I know there's still more supply on the offer side here, just as there was here. Or you even got imbalance taking place here, 54. You see this bid here at 118. Hey, that's a strong bid. It is. But it's against what, 82? Right? Even here, you see 62 and 118. Strong volumes on the bid side. The bar still has positive delta. So it's telling me that the supply is being distributed throughout this bar. Okay? Down into new lows. Okay? Now this is where it gets interesting. Funky. This is how you know the people with supply are not panicking, but are realizing, hey, you know, I got to get rid of this stuff. Red candle, red candle, red candle, green, red, red, red. So you got 1, 2, 3, 4, 5, 6 red candles, right? You make 1 new low, 2 new lows, 3 new lows, 4 new lows, and it's all positive delta. This market is making new lows on positive delta. Why? There's too much supply, right? When we think about when the market's making lows, we think of the aggressive selling. But you also have to think of the supply coming into the market that is, in a sense, absorbing whatever aggressive buying there is. Because remember, we're making lows. And for the market to rally, you need some aggressive buying. But the passive selling, right, the supply is basically absorbing whatever aggressive buying is coming into the market. I mean, you could see it, you know, coming in here, 84, 67, 58, 115. Right, even here, 64, 103, right, 74, 91, 69. Strong offers that are basically absorbing whatever aggressive buying is taking place until that aggressive buying is basically done for now, at least in that bar. Now, when we got down to this low, this is where it really got interesting because, again, making these new lows, right? Still positive delta. You got negative delta, okay, but positive delta, positive delta. Now it's starting to shift. Now you got a green candle with strong positive delta, 201. I mean, you had 205 here, okay, but nothing really materialized out of it. And I'm sort of thinking, looking at it, I'm like, well, I don't know. I mean, you know, you could look at, you know, say, oh yeah, it's going to rally, but no, you know, when you're looking at the chart, you know, when you're watching it unfold like this, and then you see the heavy volumes coming in on the offer side, you're still thinking of their supply. You see the 163, the 106, right? This bar still got positive delta, positive 185. Okay, and then it sort of sells off a little bit, 2 ticks lower, and then reverses and starts trading higher. Positive delta of 235. Next bar, 80. So at this point, right now we're stringing together 4 bars, you know, 1 red candle. But now what we're seeing is something slightly different. Okay, you're seeing the green candles with positive delta, but you're seeing the sort of the wider green candles. Okay, why is it wide? It's because now the aggressive buyers are coming in, but more importantly, that supply is missing. So whatever supply was coming in on this move down, by the time you get up to, you know, the 77 area, 77, 77 and a half, hopefully you should be able to recognize, you know what, this 163, this 106 is probably the last of whatever whatever supply there was in the market that was absorbing that aggressive buying. Okay, I mean, this sort of wraps it up, the 163 with the 106, because you don't see any volumes like that in here. And so if you can see and make the conclusion that that aggressive selling, or sorry, that, sorry, I take that back, that supply that's coming in, that's absorbing the aggressive buying, once that is removed, right, once you remove that supply that was hanging over this market, causing it to go down, take that out of the equation, and you're going to be looking for the market to rally higher. Okay, which it did. I mean, it got all the way back up into the 80s up in here. And again, you know, on this chart, you know, this is what it looks like here. Right now, we're sort of trading back around, what time is it now? We're about 1 o'clock here. So we're sort of back down in here. Maybe there's some supply coming in again later. But more importantly, what's cumulative delta at? 3,800. Okay. I know that there's strong buying at these levels. I mean, we're below 1,900 bucks. I mean, it's I personally think gold at these levels is a good buy, just sort of on a macro sense. I mean, gold is always a good buy. Period. You can never own enough gold. But really, the telling thing was markets selling off, cumulative delta basically going sideways to higher. Because once because basically, if the market is selling off, right, what do you expect the cumulative delta to be doing? You expect it to be going lower, right, because of the aggressive selling that's taking place. But if you still have aggressive buying coming in, but it's being met with supply, sort of capping any rally, basically, the market's going to go down. Because what's taking place, right? Think of it, think of it in the two-way auction, right? People that follow price, follow, Dome, follow whatever, they're seeing the price failing to go higher, right? Even though the offer's trading. And if the offer's trading for good volume and it's not going higher, then you got strong sellers in that market. Even if they're not hitting those bids themselves, those traders that are recognizing that there's supply in the market, those are the traders that are going to be hitting the bid, right? Because they're recognizing that, hey, you know what? I'm seeing strong aggressive buying coming in, right? I got buying imbalance here and the market's not going any higher. That's a sign that their sellers, the passive sellers, are absorbing the aggressive buyers. Okay, so I hope I didn't confuse anybody on this video. I'm going to wrap it up, but it's a concept, understanding supply and demand via the footprint by watching what the passive sellers are doing. Because when we think of passive buyers and passive sellers, we think of what is this in my heat map, right? We think of liquidity above the market, liquidity below the market. But when a market is going down and you're seeing liquidity, basically, offers coming in at the current offer to absorb whatever aggressive buying is taking place, that's important, right? You got to be able to recognize that. I mean, it's one thing to say, oh yeah, down here at 43.30, there's 240, at 29.5, there's 250. Okay, but right now, the market's trading 35. We're 5 points away from 30 and 29.5, right? You want to know what's taking place right now. So anyway, guys, I'm going to wrap up that video for now. I mean, it should hopefully be a little bit clearer to you. For some of you guys, may have to watch this one a couple of times to sort of grasp it. But that's sort of the whole concept of understanding supply coming into the market that's driving it down, especially when you are able to see cumulative delta, what cumulative delta is doing. Because we're 15 bucks lower, cumulative delta is, up near its high for the day at that point. Okay, remember, I think it was last week, sort of the opposite was taking place. We were at our highs of the day, but cumulative delta was negative, right? So what you're seeing today is kind of the flip side of that. All right, everybody, I'll end it there. I'll catch you guys on the next video. Bye-bye.